Hello everyone, welcome to our webinar regarding fractals here on the 31st of January, the last day of January. So today we'll see fractals and fractals indicators, what there are, their benefits, their disadvantages as well, how they can be used in your trading. Prior to that, however, I would like just to make sure that everyone they don't have any audio or visual issue. Just a quick yes or a no in our question box. Anyway, if you have any issue during the live broadcast, just stick it in the box, let me know, and I will check from my side if there is something wrong. However, before you do that, please check your settings on your computer or on your tablet, whatever you're using for watching our webinar. Also, if there are any questions that I might don't they might need longer explanations for, so because we have a 1 hour limitation on webinar, I might not be able to reply to you in the webinar. So if something like that happens, please email it to webinars@hotforex.com. Can everyone hear me, guys? No one replied, so just a quick yes would be great. Thank you, Babak. Thank you. So, disclaimer and warning. This material is provided as a general market communication for information purposes only. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or solicitation for the purpose of purchase or sales of any financial instrument. We make no representation and assume no liability as to the accuracy or completeness of any information provided, and we shall not be held liable for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading Forex and CFDs may not be suitable for investors and carries a high degree of risk to your capital. Trading such products is risky and you may lose all of your investment capital. Francis, yes, you're very clear in audio. Thank you. So, for people that are new in our webinars, I'm Andria Pichidi, a market analyst here in Hot Forex. I'm like a year in Hot Forex right now. I have gained a bachelor degree in mathematics and physics in UK, and a master's degree in mathematics and a postgraduate diploma in actuarial science. So my mission here, and in general our departments, me and Stuart, is to help you becoming better traders. So have a look in our website, have a look in our analysis website. We are publishing reports every day with our opinion, why we believe that price action will move the direction that we are pointing out. We give reasons for that. So even if you don't believe that, if you don't agree with our opinion, it's good to read those reports, because with the reasoning that we are putting down, it will help you understand the technical and the fundamental stuff behind the market. So, as of today we'll see fractals. We'll actually discuss a way of recognizing price channels, and a way of recognizing such price channels is fractal patterns, and also fractal indicators. So it's a way of identifying the price patterns. So first of all, we'll have a look on the background and the determination of fractals, because as you are aware, most of actually the Forex industry and all the indicators that we are using are based on mathematics. So we'll have a look on the background of fractals, how they started, who was the creator of them, also the characteristics of fractals, the advantage and disadvantage of them, how they can be used, how they can be used in asset trading signals, and how we can use fractals for support and resistance levels. So let's not hesitate. Sorry. Here's the background and determination of fractals. So as I already said, a fractal pattern is a repeating pattern. So we'll see a same configuration occurring through a structure for every single scale, for every single size. So just a simple determination of it is just think about a fractal as a geometrical shape that is self-similar. So the whole has the same shape as one or more of its parts. So an example of it is like broccoli over here. So as you can see, fractals are applied in nature. So as you can see, the broccoli over here is a very, very good example. It has the same shape, the whole of it has the same shape as each one of its parts. So that can be considered as a fractal in nature. Fractals are based in chaos theory. So this is the chaos theory, guys, is a part of mathematics that actually explains the behavior of dynamical systems. So scientists are basing this theory, are basing fractals to explain whether how the formation of crystals, how galaxies are formed, the climate, the general, or even the twigs on the trees, how they are branching. So this is a very, very big and important part of mathematics, because fractals, as I said, they are self-similar and they are recursive as well. So scientists are using this part of mathematics for explaining many chaotic phenomena, anything that cannot be explained with with another way. So, however, I don't want to I don't want to complicate things. What matters to us right now in this webinar is to find out how they can be applied in financial markets. So let's go to the next one. Here it says a brief background of determination, how it ended up to be applied in financial markets. So initially, guys, the study of fractals started at the 17th to 18th century. And it was used, that term fractal was used actually by Benoit Martelbourg. Sorry, I cannot pronounce his name. Benoit was a French economist and mathematician. So is so known as the father of fractal geometry. So fractals are actually a part of geometry. So what Benoit Melbrot did is like applied this theory, this fractal geometry in weather predictions, design, antennas, camouflage, solar powers, medicine, but last but not least, the applicability of fractal geometry in the financial markets. And that is what we are going to discuss in this webinar. So, however, Benoit didn't went far with the financial analysis. It was Bill Williams that actually was the first who suggested that markets are chaotic. There are multiple factors and they are self-regulative systems. So Bill Williams actually canceled all the linear models, all the linear models, and actually suggest that the fractal theory, the fact that the fractal theory suggests the complexity and is a self-similar pattern of It's a self-similar pattern, can be applied in financial market, and it actually builds up for a self-similar patterns of trade behavior. So Bill Williams was the first one. He also mentioned this in his book in the Trading House. I don't know if some of you have actually read this book. So by the analysis actually of the cotton price for more than 100 years, he find out that an effective technique for actually explain the price action was fractals. So you're very well, I know, I'm not sure if some of you disagree or agree with it, but many people believe that markets are random. Is any one of you actually believes that actually markets are random, are moving randomly without any specific pattern, let's say? Babak says no. I totally agree with you. They might seem to behave randomly. They might prices may appear to be random, but they actually, if you see the history of them, if you see the long term, you can identify that they follow a pattern. They follow they form a trend. So history repeats itself, guys, always. Even in the financial markets or in the actual life, history repeats itself. So one of the most basic ways in which a trader can determine such trends is through the use of fractals. Fractals essentially break down larger trends into extremely simple, let's say, more predictable reversal patterns. So simply saying, I agree, and I think most of you, I agree that the market patterns are continuously repeated in every single time frame, intradaily one, daily one, monthly one, weekly one, yearly one. In every curve shape, either price is going up, down, forward in time, but it will end up repeating itself. Or even with various speed, the momentum, let's say, or corrections that we are seeing all the time in markets. So chart patterns, candlestick patterns, wave patterns, and many more patterns repeat themselves, confirming their fractal nature. So fractals is another way, one of the many, to interpret a stock price movement. So let's see the technical part of it. Let's get rid of the theory. So what's the determination of let's say fractals? So you have to be aware that fractals is an indicator that provides a support and resistance. So it's actually a support and resistance indicator. We'll see some examples of it, how you can identify support and resistance using this indicator. So don't worry about it. We'll have many examples later on. Just a minute. Sorry, I have a question over here. So I'll try to reply later on, Laudoro. So as I said, this is a support and resistance indicator. Using it, you can actually, something that I believe that is the advantage of it, is the strong part of fractals, is that you can identify reversal points. So if these reversal points are identified, this might consider be also psychological levels, resistance to support the psychological levels. So if you identify such reversals and you see a breakthrough that points, that's give you signals, entry signals most of the time. Also, something that is not very common in many indicators is that it can be used on a trending or a ranking market as well in every single time frame. Not many indicators can be applied in ranking market. By ranking market, I mean consolidation. So if we have a pair that is consolidating, just is flat and it's just going 10 pips up, 10 pips down, 10 pips up. So it's just consolidation. There are many indicators that cannot be applied, they cannot give signals on a ranking market. However, fractals can actually do that. They can provide you some acknowledgement on the market, even if it is consolidating. Also, they indeed give some powerful signals, but I always say that to my webinars, it's better to combine them, your indicators, with some with additional indicators, just for further confirmation of your entry, just to make sure that, oh, I'm indeed correct. It's likely to go the direction I believe that it will go. So fractals, they might provide a lot of benefits. They might have a lot of benefits, but I strongly recommend you to combine it with other indicators, because if you're a scalper, it will not give so accurate signals. So combine it with moving averages or Fibonacci retracement. It will give you a confirmation of your entry, will make you confident on your trading. So I have a question here. Lautaro is asking that the patterns of Gartley are fractals, aren't they? So as far as I am aware, to be honest, I have never used it. But as far as I'm aware, it's not actually a fractal pattern, but it's based on Fibonacci retracement. So it's a part of Fibonacci ratio. It's using the calculations, let's say, behind Parton's Gartley are based in Fibonacci ratio. So to be honest, I have never really studied in depth this indicator, but as far as I am aware, it's based on retracements and on Fibonacci. So it's something different. It's something that has to do with rations and whatever they hit your levels and give you signals of strong or weak momentum. I'm not sure, but I think it's not based on chaos theory and in fractals geometry. I'm not sure for that, to be honest. It's as far as am I aware. That might be a good webinar for next time. Are you using it, Lautaro? Are you happy with this indicator? Sometimes. Okay, that's interesting. That is something that I could study and see how it goes, if it's a good indicator or not. Thank you. I'll have this in mind. That was a good idea, actually. So let's continue. So let's take the basic of fractals first of all, before we go to some examples. So what you have to have in mind, hopefully everyone used it. If not, I will explain them in detail. So first of all, is a fractal. Fractals are a candle pattern consisted by 5 or more candles. So what I mean by that, if you see the pictures and examples that I gave, in order a fractal to be formed, we need to have 5 completed bars, candlesticks. Okay, the first picture might be confusing. I'll go to the second one, which is a screenshots from my MT4. So in order a fractal to be, this is a fractal, this arrow is an up arrow and a down arrow. So in order for these channels to be formed, we need at least 5 candlesticks. So we have 1, 2, in the middle, 3, 4, 5. 5 candles. 1, 2, 3, 4, 5. So what the central candle actually, where the arrow is, must have either the highest high, or either the lowest low. In comparison, of course, with the neighbor, the neighbor candles. I mean, the two on the left and the two on the right. So the middle, in order a fractal to be formed, we need the middle candle to have the highest high or the lowest low. So we have two types of fractals: a bearish candle, a fractal, and a bullish fractal. So a bearish pattern, a bearish fractal is an up fractal, which is this first example that I have over here. So what happens with that? What happens with that is that we have the middle candle to be the highest high of all the rest, from the rest 4 that we have, the 2 on the left and 2 on the right, and that gives a bearish signal. So by seeing such fractal and up fractal, we might consider having in mind, let's say, that we might see a possible shift from an uptrend to a downtrend. On the other side, the down fractal is a bullish pattern, which in the middle we have the candlestick, this candlestick, which has the lowest low in comparison again with his neighbors, the 2 on the left and the 2 on the right. So this gives a signal of a downtrend that is ready to be switched switch to an uptrend. But just to have in mind something very, very important. You have to wait for the pattern to be completed, for all the 5 candles to close. Even the 5th of it has to be closed in order to have a complete fractal pattern. Don't make any decision before you see the 5th candle to close, okay? So, like every other indicator, you're aware that they cannot really guarantee the price movement, but they give us signals of it. So even if we say that fractals can explain the price movement, they can also provide us signals for the future price action. However, don't forget, I said it to the previous chart slide, that we need to combine it with some other signals, some other indicators, in order to confirm our entry. That's the important that I wanted to highlight. So let's move on. Here I have a chart of dollar yen monthly. There's no reason of why I put monthly, guys. It's just to see in practice how the fractals are looking in the charts. So over here, I was in a downtrend. I had many fractals. You can see lower highs, lower lows, and a big lower low over here. That's a down fractal. Remember, down fractal indicates a bullish pattern. So since I haven't seen a further move downwards, and instead I have seen an upwards movement, that confirmed my bullish signal. Over here we had another fractal that was up fractal, giving a small sign of bearish pattern, that it did happen by three strong down candles, which confirm our switch from uptrend to downtrend. Another up fractal over here, but okay, that's just a simple example. I will give some in detail. Before that, I just want to underline the advantage and disadvantage of using fractal patterns, just to you to have in mind what you have to look when you are using for fractals. So, how to use fractals? As we said, they have many advantages, but they have many disadvantages as well. Let's focus firstly on the advantage of it. So, when you are using fractals, you have the benefit of digesting, let's say, of viewing the charts very, very simple, because as you can see the previous chart, they are automatically drawn in the charts, and so by having those in mind, by having an up fractal or down fractal drawn in the graph, it gives us immediate overview of the market without really think about it, without like trying to find really hesitate our minds with with say what's going on. No, it shows you down fractal, up fractal, so you have the benefit of simplicity in the viewing and digestion of the charts. Also, it provides, as I said before, the major support and resistance levels. So I have put some examples over here. So just look at the second one. As you can see, in this area over here, we had fractals hitting this level twice. So that can be considered as our immediate support level. Meanwhile, on the upside, we have seen the price action hit it up to here, then trying to retest the level, went a little bit above that, but then it went down, tried to pick up again, didn't manage to. So we could consider this area, not particularly the high one, even if this area over here or in this here, it depends on your time frames and what risk and reward you want. So we can consider this as a resistance level. So it's a simple way of putting immediate support and resistance levels. So the second benefit is that you can identify the trend of your instrument. This is an example over here. The first picture, the first figure is as an example of identifying the trend of the fractal. So a simple way of identifying the trend of the fractal of the price is to connect the fractals. So these guys will help you quickly to find out whether the general trend is uptrend or a downtrend by simply connecting the high. If we are in a downtrend, then you're connecting the higher highs. If you are in an uptrend, then you're simply connecting the lower lows. So you quickly identify a channel, an up channel or a down channel. Also, if you have a trend, if you confirm a trend in this, so I have a downtrend over here, I could also easily put a Fibonacci level as well over here, but I will show that to you later on in practice. A third benefit is that it provides trade entries and trade management. What I mean by that is that on the break of fractals, so by saying on the break of fractal, is like that. If you have just focus on this picture over here, so I have a down fractal over here. However, the fourth candle after this fractal break and closed below my last fractal. That continue. Break again. So, and by saying break of fractal, I mean when my price breaks through the support or resistance level that the fractals have provided to me. It's like that. It's over here. It's the same example. So I have placed my support at this close to these two fractals, down fractals over here. So if my price close below this support level, below this recent fractal, that means that we had a break of fractal, and that can be considered as an entry point, or resistance in this example over here can be considered as a stop loss level. So the third benefit that it gave us is that you can identify entry points, stop losses, even trailing stops, whatever you want. So it provides such benefit. Trailing stop loss, as I said, as well. So the same logic, as I said, can be applied to a trail stop loss that will use newly to form fractals to reduce the risk for you, to reduce the risk or the log of your profit. So let's move on. Disadvantage of it. I might have said that is really good in every time frame, but not so good for time frames that are less than an hour. I know that many of you and many general traders, most of the traders are scalpers. You have to take care of using the fractals in a less than an hour time frame, because it gives signals, but they are not so reliable as of using it in a 1 hour, 4 hours daily, and etc. Also, what you have to have in mind is not really use them when there are very high impact news or fundamentals. They might give you a wrong signal. So wait for that fundamental, for that news to be released, and check your fractals afterwards. Don't really if there is something very significant in the market, fractals the fractals cannot comply with it. Also, as many other indicators are it's a lagging indicator. So it is a very good tool to confirm the move, the reversal of the trend, to confirm the trend direction, but not to be used for short time frames. Is not reliable for short time frames. Also, as I said, combine it with other indicators, and I will not repeat that. I will not repeat that again. So let's see how it can be used in our trading. So there are some basic rules that you have to follow if you use fractals to enter the market. So initially, you have to, as you know, as we said, it can identify the market direction. So what you initially have to see is to check the direction that the fractals are giving you. So always trade in the direction of the fractal. You have to follow the fractals if you're using it. Check the direction firstly before you enter the market. So you have, as I said, you have to determine first the direction of the market. Afterwards, once you have confirmed the direction of the market, and you make sure that indeed the price resumes this signal that you have in direction. And what I mean by that is like, in the example over here, we had a down fractal, again a down fractal, but we also had an up fractal which didn't manage to go higher. So we have no clear vision really on the direction of the market. However, on this point over here, on this last fractal over here, you have seen that it make a higher high than the previous higher fractal. So as I said, the up fractal gives a bearish signal. But again, we are not sure how the market is going to continue, right? But So we were waiting. We're waiting for another signal. What that signal is the 1, 2, 3, 4 down candles, quite strong ones, breaking below the down Bollinger Bar patterns, but also breaking our support. So support was set where the below, it's also, you have to place support below the closest or the second closest fractal. You can put it over here like I did. You can put it up here like I did, the short entry, the entry, sorry, I confused myself. So this you can put it as where you want, but it has to be below the closest or the second closest fractal. If I was in your position, I wouldn't place it over here in the latest fractal. I would prefer to have for further confirmation of my entry, for more confidence of my trade, I will place it over here just to make sure that I am correct, because the break of this fractal along with this very strong down candle, and if not that one, again that one that is quite strong as well, give me confidence that indeed the direction of the new direction of the trend is downwards. So again, what you have to check firstly, the direction of the trends, whether it resumes whether indeed the price resumes the signal direction, whether our price breaks support or resistance level. I am saying support or resistance because this is a short entry, so it broke my support. If it was a long entry, it would broke my resistance. So when it breaks your support or resistance, that you can consider that as an entry level. So if you have you will have a long entry if your price breaks up fractal. If your price breaks your up fractal, considering, of course, that the direction is upwards. You will have a short entry if the price action breaks the down fractal, considering, of course, that your trend is going downwards, confirming that your trend is going downwards. Now, where shall I place my stop loss? The stop loss is usually placed if I'm taking into consideration this example, which is a short entry. So it's in a short entry, the stop loss is placed above the closest up fractals. So I have the latest fractal was over here, so I place it over here. If you are not if you consider that being very close to your entry, you can place it above this fractal, which is higher. However, in this example, I think that's sufficient stop loss level because it was hit 3 times, it was retested 3 times, so it's quite strong. It's quite strong. So you can place your stop loss above the latest high fractal. As I said, wait for the fractals to be completed. Wait for the 5th candle of the fractal pattern to be completed before entering the market. So let's see again this example of a short entry. We have seen the pair testing this area twice, didn't manage to go beyond that, so we place we place this line over here just to have just to make sure that if it breaks, we will enter. Also, we have seen that we had a higher high over here. It didn't manage to go above that, but instead it reversed lower. This area was retested again 3 times, didn't manage to break above that, so that's considered to be our resistance level. The break of this support level entered triggered for us a short entry with stop loss at the resistance level. And where shall we exit? We are indeed have entered shortly. when you will be aware that it's an exit level, when you will have signs of a bullish signs. So what was the bullish signs for me? It was I saw that another down fractal was formed at this area over here, another one over here, a last one over here. However, after that fractal, I have seen 3 consecutive bullish candles. The second one was very strong. So I didn't wait for this area, for this pattern to complete it, because as I saw that this strong candle is not only strong, guys, it doesn't have a swing up. It closed where was his highest value. It didn't have any swing up. So this means that bulls have gained control. So there was no reaction from bears. So you have to exit here. If it's for exit levels, 2 consecutive bullish candles, and especially a very strong one, can be considered as an exit level. Or if you're not sure about your exit, combine it with other indicators. I have Bollinger Bands you see over here. So the rejection over here to go for the Bollinger Band to continue downwards, and so I have seen my price getting back. So it was you see, it was moving on the lower Bollinger Band or outside of it. However, over here I have seen it returning. So that was another let's say signal that I have to enter. I must not continue downwards. I have to close my position in order to have a profit and not a break even or loss at the end. So that was an example of a breakthrough of a down fractal, and so a short entry. Here I have a dollar cat hourly example. So that's where we will see the breakthrough of an up fractal. So what happened over here? In the hourly chart, I have this highest high. Sorry, apologies. Higher high over here, indicating a bearish signal. However, this bearish signal confirmed by 2 consecutive down candles. So indeed, my trend was going downwards. It's a downtrend, but I have seen my instrument over here failing to go beyond the 1.2395 level, nearly there. So it retested twice this level, didn't manage to go down. Instead, it retested twice this area over here, this initially resistance area at 124.40. And at some point, around 1, 2, 3, 4, 5 hours later, it breaks above that resistance level. It holds above that, you see. It tried to go down, didn't manage, tried to break it up again upwards, holding this immediate support at 124.30. I think that's 30 approximately. So it break it one, twice, 3 times, holding the support, and continue with another candle, with another confirmation, continue upwards. So this break of my initial support triggered a long entry for us. So you could enter long in this area over here, placing your stop loss in this area over here where it retested, where this level was retested twice by our instrument with 2 down fractals, that they didn't manage to go beyond that. So you have a long entry at this area over here were also significant. Remember, I'm saying that you have to combine it with other indicators. I have 50 period moving average. That blue line is 50 period moving average. It break it at this level over here again and again, but it managed to hold above the 50 period moving average. So that's another confirmation of the uptrend, along with the extension of the upper bullish band patterns. So you could enter long, and again, where you could consider your exit levels as long as you see that your price action fails to go above, to continue with some bullish candles, but instead an up fractal was formed at this level over here. We're not sure whether it will continue, so we're waiting to see how that will goes. However, in this area over here where we have the 200 period moving average, we have seen our pair to consolidate it until it break it with a very strong down candle. That can be considered as an exit level, along with this down fractal as well. So, and the break of the 20 period moving average, you see that strong red candle break the 20 period moving average, cross at the lower Bollinger Bands pattern, and also hits the 200 period moving average. That's a confirmation of our exit. That's a confirmation that we have to exit the market if we want to still stay with profit and not break even or loss. Any questions up to now? Because we are nearly done with our webinar. I will just give some other. I will also show you some non-standard fractals, but don't hesitate to ask me anything before we end up this webinar. So until I have some questions, I will also show you some non-standard fractals that you might see while you're trading. So you might face sometimes a candle that has also an up and a down fractal. That is not the standard fractal. It doesn't give you any indication at all. The only indication that it gives you that is that the market is in decision whether it will go upwards or will go downwards. So that's not a good signal. You must not use it for your trading. It doesn't indicate nothing. It indicates just an indecision of the market, indecision for the traders on what direction they shall take. So when we have seen something like that, don't enter. Be patient and wait to see a clear direction of the market. Fractals trade by market or setting the position previously? I'm not sure if I understood this question. Do you mean if they are set as default, or if we have to set it up? Let me show you also. Sorry, I haven't shown you how to set up the fractals. So I don't know if you can see. I think now you can see my platform, my MT4. So how you could add fractals is simply by insert indicators and Bill Williams. Remember, is the first applied the fractals theory in financial markets, and just click on fractals. So you don't have to change anything. Just pop it in. I will put it in some in a different color. Maybe it would be more visible to you. Maybe white is better. So it's as simple as that. Does MT4 has fractal? What are the settings? I just showed how. No settings really. If you're, however, if you don't trade in it, if you're not checking all the time frames, but you're like focusing on monthly or weekly ones, you have the option to have fractals only in specific time frames. So that's the only setting that you could, along with the color, it's the only settings that the fractals are providing. How we combine fractals with Fibonacci retracement and moving average indicator. Good question. Sorry, I haven't shown you the Fibonacci that I was saying. So we have euro pound over here, hourly one. So clearly, as I initially said, you can check the trend of the of your asset by connecting higher highs or higher or lower low fractals. So over here, is that visible? Is this line visible? Let me make it bigger. So over here we can see that we are in an uptrend mainly. So I connected the lower lows, and we see that our I get rid of Bollinger bars, it's getting confusing. So I have seen that my euro pound is going upwards. It went upwards from January 25th up to yesterday. So we had an uptrend. How it can be combined with Fibonacci? Fibonacci are always placed from the two edges of our price action, so from low to high. So what we can indicate from such chart? I have used Fibonacci. So at this area over here, I'm in an uptrend, and I have seen the latest high fractal at 0.8833. However, my pair retraced downwards. So with this strong down fractal, we had this high with this strong downwards candlestick, indicating that we might have a bearish momentum, a weak momentum from now onwards. However, this was our initial support, right? Where we had the latest down fractal. The price action broke this latest fractal, this down fractal, but it also broke the 23.6 Fibonacci level. So that's a confirmation of a down movement. So first of all, it broke the down fractal at this area over here. Tried to go a bit up, didn't manage to retrace down, breaking the support level over here for 1, 2, 3, 4 times, but also it break the 23.6 Fibonacci level. That indicates that's a second signal of a downwards of a weak momentum, that bears are gaining the control of the bear. Also, how it can be combined with moving average. I'm always using 50 and 200 moving average in my chart. So I don't know if you have used them before. You can just I'm sorry. You can just insert the moving average into your charts by insert indicators, trend, moving averages. So you could either have 50 period, 200 moving up, 200 period, or less, 10 period. So you might only want to take the last 10 candles into consideration. So it's up to you. So again, with the moving average, which broke at yesterday at 6 o'clock. It was actually tested 1, 2, 3, 4 times, but it closed below the 50 period and the 200 period at 6 o'clock. So we had a closure of my hourly candle below all three moving average, below the 2 moving average, below even the 38.2 Fibonacci level. That's another strong indication of down movement. So it did went down for another, let's see, 20 pips. So 20 pips down is 20 pips down. If you're an intraday, 20 pips is a good profit, right? It's up to your risk and reward ratio. It's up to on what risk and reward ratio you want to have. So I think every question has been replied. So unfortunately, we are at the end of our webinar. So just a recap of our webinar. As we already said, fractals are combined by 5 candlesticks. You have to always wait for the 5th candlestick to be completed. Don't be patient and don't enter the market before that. Always combine it with some indicators. Fractals are very, very good because it provides you a very quick interpretation of an overview of the market. So it quickly gives you amount of signals very easily. It also helps you to confirm and determine the trend direction. Provides also signs of a possible reversal points in the market, and is a good indicator for placing your stop loss, for finding support and resistance levels, and also entry points. Any question, guys, before I end with this webinar? So just quickly, I have posted on this slide over here a quote from Jesse Livermore, one of the greatest traders. So as Livermore was saying, he learned that there is nothing new in Wall Street. There can't be because speculation is as old as the hills. So whatever happens in the stock markets today has happened before and will happen again. Don't forget that. So like in the history, the same happens to financial markets. History repeats itself. Price continuously repeats itself. Patterns, you will see market patterns to continuously repeated, either on all scales of time frames, either as a curve shape, with the price moving up, down, or sideways, and etc. So the financial market confirms their fractal nature. So as Livermore was saying, whatever happens in stock markets today has happened before and will happen again. So that was pretty much. That's just quickly. I'm waiting for any questions if you have any. So the forthcoming webinars, before I end up, live analysis every Tuesday, as always. We have tomorrow advanced forex trading strategy. Also, for the first 2 weeks of February, we'll have multiple time frame analysis. So Stuart will go through how you could combine multiple time frames in your trading, how you could benefit from it. And also we have momentum trading on 8th of February and trading with MACD indicator on 14th of February. And that was pretty much. Thank you very much for watching for attending our webinar. Thank you for staying up to now, and hope you are having a great trading session for the rest of the day. Thank you. Bye-bye.